According to a column from the Kansas Reflector, a bank robbery hit the First National Bank in Elkhart, Kansas on July 14, 1932. An Associated Press report from the time said that there were 3 robbers and they escaped in a green coupe. But at least one of them was wounded by 2 vigilantes who had nearby businesses and tried to stop them. A dollar bill smeared with blood was found on the road headed toward Oklahoma. Bank officials said that $853 had been stolen. It would be nearly 100 years before another bank robbery made news in Elkhart.
If you'd like to earn CPE credit for listening to this episode, visit earmarkcpe.com. Download the app, take a short quiz, and get your CPE certificate. Continuing education has never been so easy. And now, on to the episode.
This is Oh My Fraud, a true crime podcast where our victims only get butchered figuratively. I'm Caleb Newquist.
And I'm Greg Kyte.
Greg, good to be with you.
We're back again.
If I'm not mistaken, you are recovering from yet another surgery.
Yes, this is surgery number 2 out of 3 for 2024.
Oh,
so right
so
hip
you're
replacement.
2/3 of the way there.
Yeah, kind of, well, I'm thinking halfway so far because I'm still in this sling. So if I'm supposed to be in the sling. I'm being a very disobedient patient these days. But yeah, right hip replacement check, right shoulder rotator cuff surgery and bone spur check. Now I just have to have left shoulder, same thing, rotator cuff and bone spur, and then I'm a new man.
Yeah, you're like you're going to be like the bionic Greg.
Exactly, unstoppable.
All right. Well, if you're new around here, this is what happens next. If you're not new around here, you know what's coming. We're going to read a review.
Yeah, don't even ask me. Just do it.
Yeah, I'm just going to do it. This one comes from Mel, who's writing on the Earmark app, and he writes, I believe in giving the good with the bad, the rose and the thorns, if you will, so here goes. I love you guys and your pod. You have made CPE possible for me again, and I really mean that. I previously got fined civilly by the state of Florida for not completing my CPE on time because I hated it so much. However, your liberal ideologies make me physically ill. I actually threw up in my mouth a little bit when Greg laid out his fantasy about Michelle Obama as president. I recommend that you do some deep soul searching and correct the errors of your ways. Now, having said that, keep up the good work, and I'm actually listening to another episode right now while I write this. That was a 3-star review.
Yeah, that sounds like where it should have been. If it wasn't 3 stars, that would have been a little confusing.
Matches up perfectly.
Yeah.
And I don't know about you, Greg, but if this guy hates our politics but loves our podcast, have we transcended politics? I mean, is Oh My Fraud the solution to the division in this country?
I think possibly, because if you remember, Caleb, we started this endeavor back in 2022 with the belief that our smartass white collar true crime podcast would heal America. So here we are, mission accomplished. This is the final episode of Oh My Fraud, because we did what we set out to do.
Yeah.
If you love Oh My Fraud, but wish Caleb and I would see the error of our ways, please rate the show and leave us a review. And also remember, if you're physically ill and need us to either keynote, speak at an event, or do some in-house training on either fraud or ethics, and that's the only way you can feel better, please send us an email at ohmyfraud@earmarkcpe.com, and we will send you our pricing and availability because, it's basically Dramamine for the soul.
Okay, Greg, got a question for you.
Yes.
Have you ever had a big screw up at work?
Yes. I've had, I don't know. It seems like I've had many screw ups at work.
I know how you feel,
but there is one that's recent enough to still smart. And it was also big enough that it might never stop smarting.
Okay.
Just always be one of those things where you remember it and you just go, oh, that was not a good moment in my professional life. So for my day job, and I say this whenever anyone asks me what my day job is. I say that I'm the in-house CPA for a group of medical office buildings in Provo, Utah, which is not false, but probably a more comprehensive job title for me is building manager, because I don't just do the books. I really manage the buildings, manage the team. I'm kind of I'm the quarterback for the entire team. So building manager is a better title. Back in 2013, we needed some help. We had some vacant space had been sitting there. We needed some help to move it. So we retained the help of a commercial real estate agent, and we signed his typical listing agreement, which was like, regardless of whether he sold the space or leased the space, he got a 6% commission. And he did the job. He leased the space, got some guys in there, got him in on a 10-year lease, which is great to get people in for that long. But also on a 10-year lease, you're paying a pretty hefty commission because it's 6% of the entire stream of revenue that you will get from these people for their entire lease. So these guys, they moved in. They were tenants. About 5 years later, those guys, they were like, hey, we like being here. We don't like renting. We'd rather be owners rather than lessees. So they purchased the suite that they were in. They actually purchased their suite and an adjacent space that was actually still in like shell condition. So it had never been built out before. So that was great for the building that they do that. And one of the interesting things about our ownership and business structure at my job is that every owner-occupied space, we still need those people to execute a lease with the building. It's long and involved why that's necessary, but yeah, even if you own the space, you still have to have a lease executed between yourself and the building. And because they're owners, we just have them be ridiculous. So it was a 20-year,
like just super long,
long, because basically what happens if you sell it, then part of the documents that we create with the transaction for selling is a lease termination agreement, and the length of the lease is just there so we don't have to every year pay more money to our lawyer to draft more leases, blah, blah, blah. So they rented for 5 years, then they bought. 4 years after they bought, they decided that they wanted to sell the space. So this is about 9 years after their they initially occupied that space. And they did. They sold it to another party. But coincidentally, the people who purchased the space from them used the exact same real estate agent that these guys had used when they first came in and leased the space from us.
Yep.
And that agent, at the end of that transaction, just kind of out of the blue, sent us a bill for $65,000.
Damn.
Is what he sent us. And here's how I screwed up. This was my screw up. Either I did not read it, or I did not read it thoroughly, or I skimmed it, or I did not retain the boilerplate in this guy's listing agreement, but there was a clause in his listing agreement that said that he was entitled to a 6% commission if these guys ever executed any other real estate transactions ever with the building. So it's like, I brought these guys in, so the only reason that you have a relationship is because of me and because of all my hard work. So if they ever do anything with you again in the future, I still get 6% of that as well.
Yeah.
And we're talking purchases, we're talking leases, we're talking lease extensions, anything forever. And here's how I got really screwed, because I was ready to fight this guy. I was ready to go to court. I was pretty sure that I could win. And I was even like going, well, even if I lost, he's asking for $65,000. So if I lose, it'll be $65,000 and maybe some legal fees kind of thing. But I was pretty sure that I could win. But then I thought back through our ownership structure, because the $65,000 was just the 6% commission on their purchase of the space. It did not include any of the commission that from the 20-year lease that we require all these owners to have, which made me think this guy probably didn't know, because it's a pretty unique part of the ownership structure.
Right.
So he probably didn't even know that there was a 20-year lease that these guys had to sign with the building.
Right.
But
Why would he?
But if I took him to court, guess what? He would absolutely
find out.
Yeah. With the discovery, there's no question that he would know it. So as soon as I found that out, I was like, oh, damn it. So I had all the I had several things that I thought could blow them out of the water for the purchase, but even the lease, I was like going, chances are that was my weakest case, was if I could get out of the lease. Didn't even know about it, so at that point I just had to raise the white flag. We wrote him a check for $65,000, but also because I was so worried about him finding out about this lease, I had our lawyer draft up the most comprehensive, airtight release, basically was what it was. So it's like sure, I'm going to pay you your $65,000, but this came out of the blue. This is ridiculous. This is not fair. So the only way I'm going to hand this check to you is if you sign this document that says that you will never ever come after us ever for any more money, even if you were to find out that there was a 20-year lease that we signed with these people. Even with that, you couldn't come after us and get any more money from us, you son of a bitch. And that's and he signed it. He signed it, and I got it. It's framed on my wall. And I took a picture of him. I put a picture of him on the front doors of the building saying, this person is not welcome on these premises ever. And that was the biggest. And the thing is too, I mean, I learned from it because when we signed the original listing agreement, I'm confident I read it. It wasn't that long. But I also am confident that at that time, when I read it, I was just reading it going, blah, 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 blah. I get it, 6%. We have to sign this to get the space lease. It's just, all this is just a formality. But, dude, now I negotiate every listing agreement with every realtor who we ever work with at all to make sure that they won't have their claws in us in perpetuity.
Right. Yeah. That's a good one, Greg.
It was a huge, dude, it was $65,000.
That's a pretty major league screw up, man.
Yeah.
All right. Well, the reason any of this matters at all is because at the heart of today's story, somebody had a massive screw up at work. Our story today takes place on the High Plains in Elkhart, Kansas. Population 1,888 as of the 2020 census. Founded in 1913, Elkhart sits in southwest Kansas, about a 15-minute drive directly west of the Colorado border, and it literally borders Oklahoma on the south side. I'm not even kidding. Google Maps shows a road that runs east and west along the border called, and this is true, State Line Road.
That's such a creative name for
absolutely,
a road.
Absolutely novel.
Yeah.
Elkhart is home to several points along the Santa Fe Trail, mostly a large portion of the Cimarron National Grassland.
The Cimarron National Grassland.
Yeah. So if you're one of those interior nerds like me, that is something maybe of interest to you.
Or if you're a retired erstwhile accountant who's trying to visit all the national grasslands, you got to go check out Cimarron, man.
I love a prairie. I love a grassland.
You did well. You grew up in Nebraska.
Yeah,
man.
Sense. It makes me a little nostalgic. Yeah. All right. At this point, you've heard High Plains, Southwest Kansas, a national grassland, and you might be asking, what's going on in Elkhart?
I'm asking that. What is going on in Elkhart, Caleb?
Not much. Lots of farming.
Right. That makes sense. I mean, again, grasslands, Kansas. I'm assuming we got some soybeans and some wheat, some corn.
Yes. Still, many rural communities are resilient, and Elkhart is one of those. It survived the Great Depression. Not every town did. And this is actually my favorite part. It was one of the towns hit hardest by the Dust Bowls in the 1930s. The Library of Congress, it's in the show notes. There's a photograph from the Library of Congress that shows one of the dust storms that hit Elkhart in May 1937, and it's like looming over the town, and it is terrifying.
Yeah.
And
I looked.
Did you look at it?
I not only did I check out that picture, I actually just Googled images of dust storm Elkhart, Kansas, May 1936, and there's several pictures.
Yeah.
And all of them look horrible.
Right.
Horrible.
And there's another link in the show notes to a map of the kind of the area of where the Dust Bowls were kind of concentrated.
Okay.
And where Elkhart is, it's in Morton County, Kansas, and it's right in the southwest corner of the state, and it is right in the center of the place that the places that were getting hit.
So this is like ground zero. This is epicenter.
Ground zero
of
ground
Dust
zero
Bowls.
for those Dust Bowls. Absolutely.
This is the original Grape of Wrath. Is what
you got
Elkhart.
it, man.
Okay.
You got it. Yep.
Yeah.
All right. Shan Haynes believed in this community, and he believed in community banking. In 2021, as a leader of a community bank, he testified before the Kansas legislature and shared advice he'd once been given by a small-town mayor. Quote, for any rural community to stay alive, they must have a grocery store, a school, and a bank.
And a liquor store.
Yeah, he left that out.
He did. Maybe he assumed that was in the grocery store.
Yeah.
Yeah.
I mean, that mayor was onto something, but he did leave out liquor store. Anyway, Haynes got his start in banking in 1993 as an agricultural loan officer and IT officer at the First National Bank of Elkhart.
Oh, so he was doing computer stuff as well as just banking.
Sounds like it.
Yeah. Nice.
Yeah.
Cool. That's especially in 93. I mean,
Yeah.
that's pretty early on in the internet age and the computer age. So he
I would
was
say so,
probably
yeah.
a valuable person. Okay.
Yeah.
Cool.
Yeah. Yeah. And the bank wasn't that old. It was founded in 1985.
Okay.
And then, so he started in 93 and he became the president and CEO in 2008. In 2011, Haynes led a group of investors that bought the bank in order to keep it locally owned. Okay.
Yeah.
With the change in ownership, the bank became a state chartered bank. Because remember, it was a national bank, right?
Yep.
First National Bank of Elkhart. And Haynes remained its president and CEO. It also got a new name, Heartland Tri-State Bank.
Gotcha. So wait, so he was the president, CEO, and a significant owner in this bank.
Yes.
Okay.
Yeah, and we'll get to that in a little bit. But in his testimony before the Kansas I think we're going to get to this now. In his testimony before the Kansas legislature, Haynes said that in 2017, he approached his fellow investors in Heartland to acquire 2 more banks that were the only banks in their respective communities. He testified that, quote, the desire to grow our bank as well as keep a bank in rural communities motivated us to purchase the banks. Haynes held numerous different leadership positions in both Kansas and national banking associations. And beyond his leadership in banking, he was a member of the local school board, and he even occasionally preached at his church and officiated funerals.
That's the thing pastors look forward to the most.
Yeah.
Forget baptisms and weddings. It's the funerals is what I'm going to write about in my memoir.
Right. At a congressional hearing where Haynes was testifying before the House Subcommittee on Commodity Exchanges, Energy, and Credit, then Kansas Representative Roger Marshall, he's the senator from Kansas now, he called Shan Haynes the pride of Elkhart. Yes, Shan Haynes lived and breathed the wholesome, tried and true life of a rural businessman and community leader. You couldn't ask for a better guy to be leading your local bank.
On Friday, July 28th, 2023, a press release from the FDIC announced that Heartland Tri-State Bank had been closed by the Kansas office of the state bank commissioner and had appointed the FDIC as the receiver. The FDIC press release stated that it had arranged with Dream First Bank of Syracuse, Kansas, to assume all of Heartland's deposits. The 4 branches of Heartland reopened the following Monday, July 31st, as Dream First branches, operating normal business hours, which, by the way, just quick side note, Dream First Bank is the second worst bank name behind Fifth Third's Bank. Just if anyone keeping score at home, that's a shitty name for a bank.
Yeah,
but there's worse.
That's an Oh My Fraud deep cut right there.
Very deep cut.
Yeah, that's
if you
like,
know what we're talking about, God bless you.
Yeah.
The press release continued. It said, this evening and over the weekend, depositors of Heartland Tri-State Bank can access their money by writing checks or using ATM or debit cards. Checks drawn on the bank will continue to be processed. Loan customers should continue to make their payments as usual. It went on to say that customers do not need to change their banking relationship in order to retain their deposit insurance coverage. Heartland Tri-State's $139 million in assets and $130 million in deposits were being assumed by Dream First Bank, who also, quote, agreed to purchase essentially all of the failed bank's assets. In other words, the bank kept operating as if nothing happened. The only difference was that the 4 Heartland Tri-State Bank branches now had a big sign on the front of them that said Dream. Well, probably not a big sign, probably like just a banner or some sort of butcher paper
banner
with with poster paint used on it that said Dream First branches, probably with hearts and stars, because a bank name like Dream First, I think you got to have hearts and stars
without a doubt.
Unquestionably. But oddly, the press release did not say a word about why Heartland Tri-State Bank was closed. Heartland president and CEO and the pride of Elkhart, Shan Haynes, wasn't mentioned in the press release either.
On August 11th, 2023, 2 weeks after the bank's failure, the Kansas Reflector reported a quote from the Kansas Banking Commissioner, David Herndon, that Heartland was closed after it became insolvent, quote, apparently the victim of a huge scam. So that's not good.
No.
Herndon didn't know what the scam was, but he was sure that no other Kansas banks were affected. Quote, it was a terribly unfortunate event, but the system did work and people had no interruption in accessing their accounts, he said. Sometimes businesses fail. This time it was a bank, but the depositors were protected.
That's FDIC, working the way FDIC is supposed to
You
work.
got it, man.
Nice.
Absolutely. Yep. It was this Reflector article, it's in the show notes, that was the first one that mentioned Shan Haynes, the bank's CEO, but he didn't respond to the reporter's request for comment. About a month later, an op-ed in the Reflector reported that no one in Elkhart really knew anything about what happened, although one woman said that there was a, quote, stink in the air. Shan Haynes didn't respond to requests for comment on that article either. But what started to become clear in that op-ed almost 2 months after the bank's demise is that many people suspected that it had been the victim of an emerging investment scam known as pig butchering.
Which people in rural Kansas should know all about. Pig butchering, I would assume.
There's got to be some hogs.
I got to say there's some hog farms out there.
Definitely.
Yeah.
The Kansas State Banking Commissioner pointed the Reflector journalist to a financial crimes enforcement network, also known as FinCEN. He pointed him to a FinCEN alert that warned of this type of scam. Pig butchering, the alert states, quote, resembles the practice of fattening a hog before slaughter. And if you've ever given more than a passing thought to how you get your bacon, then you know how gruesome this is about to get.
Here's an overview of pig butchering from the September 2023 FinCEN alert. It says the victims in this situation are referred to as pigs by the scammers who leverage fictitious identities, the guise of potential relationships, and elaborate storylines to, quote, fatten up the victims into believing that they are in trusted partnerships. The scammers then refer to butchering or slaughtering the victim after the victim's assets are stolen, causing the victim's financial and emotional harm. In many cases, the butchering phase involves convincing victims to invest in virtual currency or, in some cases, over-the-counter foreign exchange schemes, all with the intent of defrauding them of their investment. Pig butchering scams are largely perpetrated by criminal organizations based in Southeast Asia who used victims of labor trafficking to conduct outreach to millions of unsuspecting individuals around the world.
That sounds like a nasty bit of business, Greg.
The victim just abruptly ceases communication, and their whatever money is quote unquote invested with them, obviously poof, it's gone, never to be heard of again. So here's how pig butchering works. 4 easy steps. Step 1, initial contact with the victim. A scammer contacts a mark through text messages, social media DMs, that sort of thing. The perp then establishes a relationship with this new friend and builds a relationship. So, Caleb, I received one of these recently, and I took a screenshot of the entire interaction, and I sent it to you.
Yes.
And we're just going to reenact this as a brief play.
Do I get to play you, or are you playing you?
How about I play me and you play the pig butcher?
Oh, okay.
Okay.
Hi, is this Mr. Kyte?
Yes.
Hi, my name is Wang Lin. Maybe you don't remember me. We met Orem a few years ago. Gregory Kyte, how are you doing?
Oh, yes, ... I remember you quite well. Fire emoji, fire emoji, fire emoji.
It's okay. We haven't seen each other for a long time. It's human nature for you to forget me. At that time, after I exchanged contact information with you at the business reception, I said I would contact you later, but because I was too busy with work, I forgot. If I hadn't checked my address book today, I wouldn't have suddenly thought of you.
I think that was the first time either of us did any of that sexy stuff. It was amazing, but I forgot to pay you. I feel so bad. Just send me your bank account number and routing number. I need to withdraw a nominal amount, just $9,000 USD, to make sure your bank info is legit, and then I'll deposit all the money that I owe you. And that was the end of the text chain, because clearly the Wang Lin finally started reading what I was replying with, and was like, oh shit, this is not going the way I want it to. So they bounced out.
Yeah, that was a fantastic example of step 1, Greg.
Yeah. Step 2 is the investment sales pitch. After trust is established, the perp introduces the victim to a supposedly lucrative investment opportunity in virtual currency, and there's a currency investment website or an app that's designed to appear totally legit, but that in reality are completely fraudulent and ultimately are controlled or manipulated by the scammer or by the organization that the scammer is working for. And it gets even weirder. A scammer may also request remote access to a victim's computer or their device in order to register accounts with the virtual currency service providers on the victim's behalf, or they might instruct their victims to take screenshots of their device so that the scammers can help them by walking them through the process of purchasing the virtual currency, because anyone over 50 can't do that. And according to the FBI, many victims also report being directed to make wire transfers to oversee accounts or to purchase large sums of prepaid cards to purchase virtual currency. That's where I would 100% tap out. If you're telling me to buy a bunch of iTunes cards to be able to invest in something, I go, wait a second, this is where it's clearly bullshit, and I'm out.
Yeah.
And once a victim acquires the virtual currency, the scammer then directs them to quote unquote invest the funds through the investment websites or apps, although the funds, like we said, are funneled to virtual currency addresses and accounts that are controlled by the scammers or by their co-conspirators. Step 3 is the promise of greater returns. The scammer shows that the victim's investment is amazing and the returns are kick-ass and they're just making money. Sometimes they'll even let the victim withdraw some of that purportedly earned money, but then entice them to invest even more. Victims have been known to liquidate holdings in tax-advantaged investment accounts or take out home equity lines of credit or second mortgages on their homes in order to simply increase their quote-unquote investments. Step 4 is the point of no return. When the victim's pace of investment slows or stops, the scammer will use even more aggressive tactics to extract any last money that could possibly be squeezed out of these people. The scammer may present the victim with supposed losses on the investment and encourage them to make up the difference through additional deposits. If the victim attempts to withdraw their investment, the scammer might demand that the victim pay purported taxes or early withdrawal fees. Those bastards. And once the victim is unwilling to pay more into the scammer just ghosts them. They abruptly cease all communication with the victim, and the victim's entire investment is gone. Poof, disappears.
According to a report in Bloomberg, on July 5th, 2023, Shan Haynes met with one of his wealthy farming customers with a request. He needed a loan of $12 million. Why did a banker, the CEO of a bank no less, need a loan? Because you're a bank.
Ridiculous.
That's where the money is.
Yeah. I have some close relationships with some bankers because of work. If any of them came to me and asked me for a loan, I'd be like, the hell are you talking? Something is so wrong.
Not right.
Yeah.
Haynes told his customer that he would repay the loan in 10 days and pay him interest of $1 million.
Wait, come again?
I would be happy to repeat that. Haynes told his customer that he would repay the loan in 10 days and pay him interest of $1 million. So
for those 10 days.
Yes. So to call that amount of interest usurious, or is it usurious?
Yeah. Yeah, no one actually says the word out loud. They just read it.
No,
in their
they
heads.
don't.
Yeah,
no. But whatever the word is, however it's pronounced, it really doesn't do that justice.
Right. Also,
you're talking about $1 million bucks.
Is it usury if you're the one who's offering to pay that amount of interest?
Right. Maybe, probably not, actually. Right. But you're talking about $1 million on a loan of $12 million.
Yeah.
For just 10 days.
Yeah.
So, Greg, you're good with numbers.
Yeah.
Can you figure out what that interest rate is?
I did. You gave me this math problem before the episode, and
Yeah.
I punched it into one of the apps I have for work for calculating exactly this kind of thing. And it came back at a little over 304% interest on an annual basis.
Yeah, that's a loan shark.
That's ridiculous. Yeah, I mean, if a bad mortgage loan is 6% right now, you're paying 50 times that amount of interest. That's a desperate. That's not just. I mean, again, if a bank CEO and president is coming to you asking for a $12 million loan where they'll happily pay you 304% interest, something the world has ended. Something completely wrong is going on.
Haynes told his customer that he needed the $12 million to get some money out of a cryptocurrency investment. Apparently, there was a problem with the wire transfers, and Haynes said that he needed to put more money in order to get his money out. Haynes assured his client that the money was not the bank's.
Which again, is that a weird thing to say? I mean...
Yeah.
It's like, hey, there's a bunch of money invested in this cryptocurrency thing, and I need to get back. It's not the bank's money. It's my money. It's like, why did you? I didn't think it was the bank's money. Now I think it's the bank's money. So yeah,
Ultimately,
Shan Haynes, he's desperate.
Well, we'll get to it. We'll get to that in a second. Ultimately, the farmer declined to help and told Haynes that he thought it was a crypto scam. If he, Haynes, wanted the money, he'd have to go to Hong Kong to get it. About a week later, this client learned that Shan Haynes had wired over $12 million to Hong Kong. This person then promptly told one of the bank's board directors. That director went to banking regulators, and on July 28th, 2023, Heartland Tri-State Bank was declared insolvent and shut down. As we mentioned earlier, the depositors of Heartland were protected. Their money ended up at Dream First Bank. But the investors in Heartland weren't so lucky and weren't included in the FDIC receivership. Investors included quote, families that owned local businesses, teachers, retirees, and ranchers. Shan Haynes himself and some of his family were some of the largest investors in the bank. Haynes' stake alone was reportedly 7%.
In addition to the press release it put out on July 28th, 2023, the FDIC put Heartland Tri-State Bank on its failed bank list. It also provided guidance for depositors, borrowers, creditors, and shareholders, and included information about Dream First Bank and an FAQ page. Besides the FDIC coming in and taking things over, another thing that happens when a bank fails is that the Office of Inspector General for the Board of Governors of the Federal Reserve System and the Consumer Financial Protection Bureau completes what's known as a material loss review.
That's a mouthful.
It is. That's a huge mouthful. These reports are mandated by law, Caleb. Section 38K of the Federal Deposit Insurance Act as amended by the Dodd-Frank Wall Street Reform and Consumer Protection Act, to be precise. We could try to continue being coy about this, but we'll just get right into it because the report does. On page 2 of the first paragraph under the heading Finding, the report gives us the goods. It says Heartland Tri-State Bank failed because of alleged fraudulent activity conducted by the bank's chief executive officer, who initiated a series of wire transfers totaling about, wait for it, $47.1 million of Heartland's funds, among other suspicious activities as part of an apparent cryptocurrency scheme referred to as pig butchering. There you go. Government reports seldom get clearer than that, Caleb.
Indeed.
That's not the executive summary. That's the report. So, It goes on to say significant internal control breakdowns. What? And the influence of the CEO as a dominant management official created an opportunity for the series of apparently fraudulent wire transfers to be initiated and processed. These wire transfers significantly impaired Heartland's capital and liquidity, causing the bank to become insolvent. The report then lays out what happened. You can look into it for yourself. We link to it in the show notes. There's figure 1 on page 10 if you're wondering of the report. But I'll just briefly explain what's on there. From May 30th, 2023 to July 7th of that same year, just 39 days, Shan Haynes made 10 outgoing wire transfers totaling $47.1 million to a cryptocurrency wallet in his name. The smallest of those wire transfers, $1.5 million. The largest of those wire transfers, $10.3 million. Very subtle, very hard to catch transactions of those small sizes. But you think about, a tiny town. The town had a population of less than 2,000 in 2020. So yes, my guess is that most small town banks like that don't have multi-million transactions just every few days going through. Right. And the last 2 transfers on the list, if you look at it, total just over $12 million. Why were they $12 million? Because that was the $12 million that wealthy farmer customer refused to loan to Shan Hayes. And that was the wealthy farmer who, like we said, ultimately ratted out Shan to the bank's directors. And like I said just a second ago, the size and frequency of the transfers were nuts. Highly unusual for Heartland Tri-State Bank. As part of the analysis, the investigators looked at the bank's wire transfers in April of 2022 and found that there were only 16 transfers for the entire month, and the smallest one was $500 and the largest one was $2.6 million. So that's 30 days, 16 wires, and the biggest one was $2.6 million. But when Shan did it, it was 39 days, 10 wires, just his, not to mention the other wires that obviously must have happened during that same 39-day period. And like we said, they ranged from 1.5 million to 10.3 million. So way out of whack with typical bank business.
activity.
Also, the investigation found that as of March 31st, 2023, the bank had this was right before his stuff happened, starting at the end of May. So this is the end of March, same year. The bank had 0 borrowings on its books. But as of the last week of July 2023, the week that the bank failed, it had used $24 million of its lines of credit. So it went from not having no debt on the books to $24 million on the books from April, May, June.
4 months.
July. Yeah, 4 months. And on top of that, Heartland also borrowed $21 million from a federal home loan bank. It hadn't borrowed from a home loan bank for 3 years prior to this going down.
Suspicious.
Yep. Suspicious. Just writing on that. But the other crazy thing, this happened so quickly that likely, I mean, one of our big questions is always, where are the auditors? They were. This was between audits. The bank failed so quickly and went from no debt to lots of debt and all that the auditors they're getting a pass on this one, Caleb. From me. So how did it happen? You won't be surprised that there are big sections in the report with titles like internal control breakdowns. Of course. Heartland employees circumvented the bank's wire policy and limits. Heartland employees did not comply with the bank's Bank Secrecy Act and anti-money laundering policies. And another title that says influence of a dominant official. So the report outlined all the ways that internal controls were dog shit and or at least were completely ignored. But that's that. I mean, we talk about that. I mean, if you're an accounting professional, you're completely familiar with management override of controls, and that's exactly what happened here. You had a president, a CEO, a major shareholder in the bank, all those things, and he just had the ability, because of his dominant position, to do basically whatever he wanted to do. And by the way, you might be wondering what CEO Shan had to say about everything that he did. The report states that the Federal Reserve Bank Kansas City staff interviewed Shan twice during the week of the bank's failure to get an understanding of what happened. And the report explained that, quote, the CEO provided Reserve Bank staff screenshots of messages and supposed cryptocurrency account statements. Reserve Bank staff found the CEO's explanations for his activities to be unreliable and inaccurate because the CEO's explanations for the transactions did not make sense and were difficult to follow.
That material loss review was dated February 7th, 2024. On February 12th, 2024, Shan was charged with 1 count of bank embezzlement. Of course, 1 count doesn't sound all that bad, but it does sound pretty bad when you consider that embezzlement was $47.1 million.
Right. Because you could have a lot of little embezzlement counts, or you could have you just get it, pull the Band-Aid off with one tug.
He was also charged with 29 counts in Morton County District Court. That document is in the show notes as well, if you care to look at that. In those charges, we see that Haynes was accused of taking $40,000 from his own church and another $20,000 from an investment club he had with some friends.
I hate all of that.
Woo. In May 2024, Haynes pleaded guilty to 1 charge of embezzlement by a bank officer. As of this recording, in June 2024, he's scheduled to be sentenced in August. He faces a maximum sentence of 30 years in prison.
So, Caleb, did we learn anything from today's case?
You're turning the tables on me, Greg.
I am. I want to know.
Yeah. Look, we learned a lot, I think, about pig butchering.
Yeah.
Pig butchering scams caused... We did some more research into this. Pig butchering scams caused losses of more than $2 billion in 2022 in the U.S. alone. That's an increase of 183% from 2021. There's an excellent Last Week Tonight episode on pig butchering from February of this year, explaining how they work in detail, including the very convincing crypto trading platforms that are completely fake.
Yeah.
There are several stories where people have lost hundreds of thousands of dollars. It's pretty gut-wrenching, actually, to watch those.
Yeah.
We mentioned this earlier, but the criminal syndicates in Asia that run these scams, they force human trafficking victims to scam Americans mostly. There are reports that state that tens of thousands, possibly hundreds of thousands of human trafficking victims have been tricked into these jobs and forced to do them. So, as tempting as it may be to reply to a strange text or DM with an all caps fuck you or eggplant emoji, just think twice before you're doing that, because the person probably sending you that message is probably also in a very bad situation.
Right. But maybe they'll forward it to their boss. I mean, if their boss is looking over their shoulder, the guy knows that it's like, hey, they're talking to you, really.
Meant for you.
This is
meant for you, pal.
Not for me so much.
Anyway, and that last week tonight episode, it does mention this case. It does mention the case of Heartland Tri-State Bank, and it's a pretty devastating story. My question for you, Greg Kyte, is how do you sympathize with Shan Haynes, or how do you see him in this ordeal? Because he's clearly a victim, but he's also a perpetrator, and so I'm just curious how you reconcile that. I have a story that I've been writing in my head to fill in the gaps, because there's a lot of gaps, because Shan hasn't publicly said much about what happened, why he got into it, how he got tricked, all that sort of stuff. So in my mind, what likely happened is that I mean, again, this is absolute speculation. Chances are this is largely, if not entirely, incorrect, but this is my guess, is that Shan was intrigued, just went through the steps, was taken through the steps of pig butchering, and that he was like, hey, I'm the CEO of a bank, and I'm one of the owners. I can get a loan. I can give myself a loan from my own bank to invest in this. And then he's seeing all these, just like we said with the steps, he's seeing this wild returns on what he's supposedly invested with this pig butchering scam. And so he's like, I need to get anything else I can put in here is going to be just gold. I think we've all been in situations like that where we see an opportunity unfolding. We look in our bank account and go, oh, I can only get in on this to a very meager extent. And so likely he did whatever he could to extend stuff. And then he starts seeing that everything's sort of fall. It almost like, I mean, I guess so maybe a more direct answer to your question is, I assume that there's a lot of the same psychology that happened with Shan that happens with gambling addicts, where he's like going, I can make this right. Like we started the show off, I screwed up big time with my company, but I can make this right if I just, as long as I could get this, all I need is $12 million and I can get all $47 million back. So that's all I need, and I can make it right. And so you keep digging yourself in deeper, not knowing that you're just throwing every single dollar down a toilet. And and it just gets out of hand, snowballs, gets out of control. You're desperately trying to fix your huge hole in your sinking ship, and you just can't, and everything goes down. It had to have been terrifying.
Oh, absolutely.
Terrifying.
Absolutely. And again, I lost $65,000 of my company's money because I didn't read the fine print on a contract.
Right.
This, which sucked. I mean, I just, again, every time I even think back about that, like, I can't explain the visceral feeling that I feel about fucking up to that extent.
Yep.
And then it just crushes me when I try to be empathetic with Shan and just go, that was for $65,000. What if it was $47 million? I can't I can't even.
Well,
can't
I mean,
even
and that's the
comprehend
thing.
it.
Like on Last Week Tonight too, they kind of like, you and this guy is the CEO of a bank.
Yeah.
And not like a new CEO, like
Right.
had been a CEO of a bank for like 15 years.
Yeah.
And so he at some point, and like, I imagine this story will come out eventually, but like the details of it, but yeah, somehow he got taken in, and then it became apparent that he was on the hook. And you're right. He's like, wait a minute. I think he in his mind, he thought he could make it right.
Right.
And it was like, but it was he'd already given it up, right? The game was already up. The jig was already up.
Just desperately grasping at straws to try to, with false hopes, hoping against all hope that somehow things would work out.
Right. And that is, I think, that is a feature of these pig butchering scams. Is like, that's how they keep people on the hook, is they give them that sliver of hope that they can somehow figure it out.
And I got to think that everything we were talking about, like step 4, where it's like the jig is up, all hope is lost. And they're like going, oh, you want your money back? Oh, where they're almost like going, guess what? We're an organized crime ring in Southeast Asia, bitch. That's who you've been sending this money to. You want it back? Cool. Send us another $400,000 and we'll send you your money. You know what I mean?
Yeah.
And you just go, I don't think it's going to work. But at this point, I've already lost, I mean, maybe with Shan's case, that was the 12 million. It sounds like that was the 12 million, where it's like, well, I'm already screwed horrendously already. So what's another 12 million on top of 35 million? If it has any remote possibility of making things right, yeah, we'll do it. So, which is such crazy leverage that the scammers have.
Oof.
Can't even believe it. Okay, that's it for this episode. And remember, fool me once, shame on you. Fool me 10 times, and you just made $47.1 million.
And also remember, screwing up at work is fine. Screwing up at work and then trying to cover it up by stealing money, wow, not okay.
Not even in the slightest. If you want to drop us a line, we'd love to hear from you. Send us an email at ohmyfraud@earmarkcpe.com. And Caleb, if people want to get a hold of you, where can they find you?
LinkedIn/Caleb Newquist. Greg, still hanging on?
Yeah. I was hoping you were just going to say, I said, where can they find you? And I wanted you to say, LinkedIn. How about you, Greg? Yep.
That is how I feel.
Also, LinkedIn.
Like a big heavy sigh.
Yep.
Yep. Oh My Fraud is written by Greg Kyte and myself. Our producer is Zach Frank. Rate, review, and subscribe to the show wherever you listen to podcasts. If you listen on Earmark, you can get CPE for listening. Join us next time for more avarice, swindlers, and scams from stories that will make you say, oh my fraud.